Welcome back on this Friday afternoon to Market on Close. I'm JD Durkin here at the NYSE. Time now to discuss the commodities market with Phil Streible. He's Chief Market Strategist at Blue Line Futures. Phil, it is great to have you here. Very happy Friday, but there is a lot of busy stuff to talk about. I want to get your perspective on what's happening with crude oil and its upward move since last night. Geopolitical tensions, is it supply constraints, a combination of both? What are your thoughts?
Yeah, I mean, the real concern here is the Straits of Hormuz, which has 20 million barrels going through it every single day. It accounts for nearly 30% of the world trade in oil, and it's 70% of it is destined to go to Asia. So that is the big concern, and the threat is whether or not that gets shut down. Iran coming offline, yeah, it's going to have some price momentum upwards, but the big killer would be if they shut that down. Also, we're going to be monitoring the type of escalation that we see. Is there more? Is this just a one and done where we see a bit of retaliatory nature occur? And then after that, some of the headlines die down from there. We have a ceasefire, something like that. Negotiations take to the table. So if you look at the oil market, something to note is if you look at all the highs going from in the last year, the market has made a series of lower highs. So even that dramatic green shoot we saw last night up to 77.62 really wasn't scratching the surface technically, and we're still in this downward trend.
What are you tracking, and what do you think is most important for our viewers to keep in mind about where OPEC Plus is today with regards to output versus the conversation we were having, which was so different for OPEC Plus even just a few years ago in terms of production and output?
I mean, the issue with OPEC right now is that they tend to overshoot and they underdeliver. So they've come out with these they talk a big game as far as increasing production. However, the devil's in the details and the proof is in the pudding, and they've failed to provide that as the backdrop. Now, obviously, they could take different measures here. We could see the EIA release some of the barrels and things to get prices down. My suggestion to the viewers is to probably go out and use that gas buddy and get the cheapest gas out here, because you don't know what's going to happen over the weekend, and prices could be dramatically higher come Sunday night, come Monday. So, you know, the factor is that you really want to watch the escalation and see how it unfolds, and that's what's going to dictate price momentum for the near term, and then also OPEC will be farther down the road.
Yeah, Phil, we're seeing a bit of a divergence in the performance today in the metal space. Gold doing one thing, silver doing something else. Let's start with the former. Gold currently up 1.3% today in the session. Safe haven buying, rate cut expectations, a bit of a pivot to something else. What do you see so far in the session for gold?
Well, this is mostly the safe haven buying, although if you look technically, it had a bull flag, it broke out above it, it reconnected, retested it on that CPI release, and then since then, once the escalation occurred, gold futures had broken out over the resistance. It looks like gold futures could be targeting, $3,600 if we continue to see this type of geopolitical tensions take place. When we had the CPI number come out and it was a little bit lower than expected, it really put a risk on vibe into the markets. And, we saw US equities pushing up, and realistically, if you have equities going up, you'll have industrial metals going up, and the need for gold just doesn't take place in the portfolio. Some gold is always appropriate because you have these situations that come out of nowhere, but the reality is that once you got the tariff talk going from Trump a few days ago, and then you get these geopolitical tensions, gold's back on the table.
Phil, do we have a sense of how much of gold's momentum is coming from within the U.S. or maybe demand coming from outside the U.S., some other emerging markets?
So that's where you want to look at when is gold making its movement. And right now it seems to be around the clock. So a lot of investors are coming back into that market. ETF flows had peaked about a month ago. They started to come down a bit. We've seen a rotation into silver, into platinum, into other metals here. But now we should probably see another big jump up come next week, where people are looking at it for that safe haven demand.
All right, I want to talk to you about silver as well. It is down now just fractionally about or so on the day, about 0.07%, so not quite the same conversation for gold, but oftentimes we know it does lag gold as well. How sensitive right now do you see the price action that's going on in silver, and what is something about the way it's been behaving recently that you think more of us should be paying attention to?
So a couple things. When you take a step back, anytime you had any of these crises, whether it's financial crisis, COVID, et cetera, the tariffs, what happens is people get defensive, they go into the gold market, and then as the economy recovers and policy changes occur, the administration acknowledges it and then pivots, you see the industrial metals take off. And that's where silver, copper, they really start to lead gold, and you get the gold silver ratio coming down. The problem with silver here today, it was deciding which hat is it going to wear. Is it going to be the industrial demand hat? Is it going to be dependent on the global economy, or is it going to have the safe haven demand? And from the price action, it just couldn't figure it out. And that's why we traded it in a very tight range. One other thing to note, the gold silver ratio 95-1. Anytime you get over that 100-1, it really tells you that we are in a different situation. We're in this dire situation. So you want to monitor, where's that next level? Is it going to break back below 90, or is it going to travel back over 100? Above 100, this problem, these geopolitical risks, they're taking longer than expected.
All right, well, I got you. We got to hit on Bitcoin because we are seeing it down about 0.6 or so today. It's trading down to 105. You look at maybe a little bit of a recent resistance level around 110, 111 to the top side, and a recent support maybe around 101. But I wonder, what are those levels that you're seeing for Bitcoin you think we should be paying more
really, it's that
attention
101 up to 112,000. Something that I don't like is that it tried to break out, tried to make, it did make a new all-time high, but there just wasn't any follow through. And we've been trading in this kind of upward channel around those numbers that we outlined. It does have a lower high on the charts, but Bitcoin is one of these markets that's very sensitive to risk and things like that. And it was the one that led out when we were coming up from US equities selling off. They hit their bottom. It was Bitcoin was already moving to the upside. So we're going to want to watch some key levels, and it's really that 100,000 mark on up to 112.
Yeah, it does look like earlier today, maybe just slightly, ever so slightly, dipping below its 50-day moving average. But right now, at least for the time being, trading back up above it. Phil Streible, I learned a lot the last few minutes, my man. Thanks for being here. Happy Friday. Enjoy your weekend. Phil's chief market strategist at Blue Line Futures. Coming up on the